Well, first of all, I should say they call me the Godfather. I like to think it's for good reason, but part of the reason is because I'm not a young person. I started out in the workforce as an engineer, and I found myself, after a couple of years, 4 or 5 years in the engineering world, working with what at that time was latter-day versions of the young characters from the Big Bang Theory. I had excelled in school, always at the top of the class, always perfect scores in math and science classes, and yet I felt stupid working with the people that I was working with in my chemical engineering jobs. They were just off the charts, crazy intelligent. So I made a great decision. Actually, let me get this meeting recorded. It is recorded. Thanks, Cam. You're the best. I made a decision in 1985 to switch careers from the world of engineering, where you had to think very deeply, very hard, and very long about what you were doing, to the world of floor trading, where you may not have been right, but you had to make decisions very quickly. Now, back in the mid to late 80s, the exchanges that I traded for were not as busy as they became later. At that time, I might have only been processing a couple of thousand trades a day. As I continued, starting out on the Boston Stock Exchange, and it started to pick up volume dramatically as the 80s gave way into the 90s, that was more like 5 or 10,000 trades a day. But starting in 1988, I was given an opportunity to trade with a firm at that time called Payne Weber, one of the big four New York brokerage firms. They were very big in the area of brokers, but they didn't have much in the way of trading. So in 1988, I started a floor trading business for them in the regional Boston Stock Exchange. In the very early 90s, Payne Weber acquired a book of stocks that was trading on the New York Stock Exchange, and they felt they didn't have the talent. So they sent me down to the New York Stock Exchange to see if I would like being a trader down there. And this is tied into futures. I'll get to it in just a sec. And I met a gentleman who many of you might know or at least have heard him talk, a gentleman named Arthur Cashin, who gives commentary on almost a daily basis on CNBC. Now, Arthur's been around a while. I met him in 1990, and he had already been in the New York Stock Exchange trading floor for 27 years. He started out there in 1963. By comparison, I switched careers in 1985 from engineering, and I hope you believe me if I say that I was only 5 years old when I switched careers, which would put me only in my mid-30s. Of course, that's a little bit of a tall tale. But I was young back in the 1990s when they asked me to go down to the New York Stock Exchange. And I meet this gentleman, Arthur Cashin, and he's walking me around the trading floor. And he's talking about back in 1990 that this new program, referred to as index futures, I should say this new product, was going to someday really catch hold. And he was describing a little bit about what it was. And as he and I would work out at the trading posts, before I was committed to being there, we had the opportunity to watch futures trading live on computers. Well, in that date, in late 90, I didn't actually start down there working till early 91, but in the late 1990 time frame, traders on the New York floor did not even look at the computers. If you look at old pictures or video from the New York Stock Exchange, it's still kind of the same today, with minus the 6,000 people that used to trade on the floor. But you would see human beings standing in front of these banks or walls of computers. The trading posts were kind of horseshoe shaped, with maybe half a dozen floor traders spread around the outside of the horseshoe, with our staff, our assistant traders inside. And he and I were noticing something that became the most active type of trading in the New York Stock Exchange, and indeed in Wall Street to this day. We noticed that as the futures would rally, I'm talking about index futures and I will define them. We noticed as the index futures rallied, a short time later, there was pandemonium on the New York Stock Exchange trading floor. There were people rushing out from the sides of the rooms. On the New York trading floor, the traders were out in the more or less the middle in most of the trading floor. The broker booths were concentrated all around the outer walls. We actually called them the caves. We'd say, oh, the brokers are running out of the caves. Here it goes. Here's some fun. Here's some action. And the brokers would come running out screaming, and they all had buy orders when the futures rallied. They all had sell orders when the futures rallied. What we were seeing is what has become in the 2000s, and certainly in 2017, programmed trading.